Hi, and welcome to the third strategy, which is the Fibonacci Ladder. This strategy is a powerful tool for traders seeking to identify key entry and exit points using Fibonacci retracement levels. Before we start, I want to start with a trade disclaimer. Everything I teach in this course is not considered as financial advice and it's for educational purposes only. Take a moment to review and we shall continue. The Fibonacci retracement is a widely used technical analysis tool based on the Fibonacci sequence. It helps us pinpoint potential areas of support and resistance in a price chart. Here is a step-by-step breakdown of how the Fibonacci ladder trading strategy works. First, we need the Fibonacci ladder tool settings. We have to get our tool ready. So you get these levels that you can see here, and you go on TradingView, select the Fibonacci tool, Fibonacci retracement, and let's say yours is like that, and you want to click on the settings and apply the values that are shown here to set up your tool right. Alright, so identifying a significant price swing. First, we need a high and a low, or a low and a high. For a long setup, we pull the Fibonacci tool from the low to the high. So, say, for example, here, get your Fibonacci retracement. We need a low and a high. So pull from the low to the high. Click on the Fibonacci ladder. Also, when you apply the values I showed you, you want to go on, let's say you have applied the values. Go on templates, click on the arrow down, and you save as, and you name it, and you click save. Therefore, when you pull your tool, you will always have it here on your saved template. So we pulled from the low to the high. We need 2 pivot points. Okay. And for a short position, we pull from the high to the low. Okay. First, to identify significant price swing, we need a high and a low. Also, this strategy works really well with market structure confluence. So market structure and the Fibonacci ladder strategy work really well. So you have your market structure here. You have a high and a low, a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then your lower time frame market structure breaks. We have a market structure change, and then we can pull the tool from the low to the high and then get in on the retracement. And these levels here are our entry points. So you divide your desired entry size into 4 equal parts. For instance, if your entry size is $4,000, allocate 1,000 or 25% of the total size to each entry point. So let's say your entry size, you worked out your risk management, and you will enter the trade with $4,000. In each of these levels, we will set limit orders. So we have 1,000 here, 1,000 on the 659, 1,000 on 605, and 1,000 on the 795. and placing entry orders. Place limit orders at each of the predefined Fibonacci levels with the corresponding entry size. This allows for a staged entry into the trade. And your take profit levels are these green lines here, the 0.28 and the 0.234, 0.618. And your stop loss is this red line that's 0.172. Stop loss goes at the 1.00172, the red line. So managing partial fills. Let's say if not all of your entry orders get filled and take profit 1 has been hit, we cancel the unfilled orders. So you put your tool from low to high, and the price moved to your entries, and only 2 of your orders got filled, the 618 and the 659. And then price proceeded to go to your take profit 1. The 2 remaining orders that have not been filled, we cancel them. And moving on to the next one, trailing stop and early exit. Depending on your trading style, you can move the stop loss to break even after hitting take profit 1. You also have the flexibility to close the trade after reaching just 1 or 2 take profits rather than all 4, depending on your risk management strategy. So let's say you put your tools from low to high, and you are filled, and take profit 1 has been hit. We can move our stop loss to break even or below the last low, or even close the trade entirely. It's up to you and your risk management strategy. So this is a short example with the market structure confluence. So we have a high, low, higher high, higher low, a higher high, higher low, and then we have a lower high and a lower low. We can see the market structure has changed. So we can get ready for a short trade. We pull the tool from high to low, and then set our limit orders on the Fibonacci levels. And when we get filled and take profit has been hit, we can move our stop loss to break even, or below the last low, or close the trade entirely if you like to do so. And or you can stay in it and get the take profits all 4, depending on your risk management strategy. So this is a long example. Pull from low to high. We get filled, and depending on where we would like to close the trade. Yeah, it's a really nice strategy. I still use it to this day. And yeah, the Fibonacci strategy blends technical analysis with prudent risk management, offering a structured approach to trading. So yeah, let's see a live example here. So we identify the levels to pull from, a low and a high. So place our limit orders on these levels, 618, 659, 705, 795. The stop loss is the red line, 1.0172, and our take profits are the green lines here. So we get filled, and then take profit has been hit. Our stop loss, we move it to break even or below the low, or we can close entirely, or we can trail our stop. Let's say take profit has been hit, we move the stop loss to the recent low, and then when the next take profit hits, we can move the stop to the last low. And this strategy, its adaptability, makes it suitable for traders with varying preferences and risk tolerances. You can also use this strategy to all time frames, from the 1 minute all the way to the monthly, and it works really well with market structure, which that is in downtrends or uptrends. And yeah, this is one of my favorite strategies, and I still use it to this day. Let's find another example here. Let's say we check the structure: high, low, lower high, lower low, lower high, higher high. Market structure changes, breaks the market structure, so we can select the pull from high to low when market structure changed. And wow, I just found this randomly, and as you can see, it really works well with market structure. So we break the structure, pull our Fibonacci tool, and we get ready for a long trade. Set the limit orders to our Fibonacci levels, get filled, and take profit has been hit. Take profit 1, take profit 2, 3, 4, 5. If you trailed your stop loss, this would have worked really nicely. So your take profit has been hit, trail the stop loss to the recent low, and then when take profit 2 has been hit, we trail the stop loss to the recent low, and when the take profit 3 has been hit, we trail the stop loss to the recent low, and so on and so forth, and all your take profits has been hit in this trade. And yeah, and that's it for the Fibonacci ladder strategy, and I will see you on the next one.